We're going to get cracking in a moment, but before we do, this is an important announcement. The information contained in this podcast is general in nature and does not take into account your personal situation. We don't guarantee the quality of the wine or the banter contained in this content. You should consider whether the information is appropriate for your needs and your daily intake. And where appropriate, seek professional advice from a financial advisor, accountant, bottle shop assistant, or relevant qualified professional. Matters referred to in this podcast are of general nature only, and for those of drinking age, and should not be relied upon in place of appropriate personal advice or the odd glass of wine on a Friday.
To make sure you get the most out of wealth, wine and wisdom, folks, please follow the house rules. Don't be a wallflower, get involved in the chat. We love to have some questions, feedback, and a little bit of commentary along the way. You give us energy, we'll have a good time. Make sure you pour yourself a glass of something wet to wet the whistle. Make sure you get the banter flowing as well. Doesn't matter what you're drinking, whether it's wine, our favourite, beer, coffee, maybe it's a cup of tea, water, or even juice. Keep the good energy flowing, folks. There's some house rules. If you don't put your name down, we don't know who you are, you're not coming in. Don't spam or advertise. This is our little game of cricket. This is all about debriefing the week, folks. What's going on out there in the world, and hopefully get you some sanity, maybe a bit of a chuckle at the end of the week, so we can all be on the same page and keep moving forward. Make sure you respect your fellow patrons, because we don't let any old muck in this place. And most of all, have some fun and enjoy this episode of Wealth, Wine and Wisdom.
Hey!
Oh, we made it back, Fenton. We're back, Mortimer. We're back.
We're back. We're back. Who can guess where that quote came from? We're back, Mortimer, one of our favourite old-time shows. See who out there listening today is as old as us.
Oh, there you go.
Good to see you, mate.
Mate, great to see you. A few people already on and a few cheeky comments coming through. Jeff, good to see you, mate. He's broken down, so making the most of it while he's sitting around. Julie, back at you.
He is a very cheeky boy.
You soon. Yeah. Got a few of the early crew here. Alison, great to see you. Welcome along, folks. We haven't been around for a while. Fenton's been busy. I've been busy. It's been difficult to coordinate, but we're back. And we're going to try and get our mojo on. Gabrielle, good to see you. Thanks for joining us. Great to have the early birds here. We got Beck as well. Fantastic. Mate, why don't we do the good old intros from back in the day? Why have we ended up here? What's this Wealth, Wine and Wisdom about, folks? Well, many, many moons ago, Fenton, what happened?
Well before this was great, we got together, and I was just reflecting today because somebody gave me a point-to-point return of a portfolio from 2019 to today, and I was like, "Holy shit! Was it really only 2019? Was it actually? And it sort of was it that close? But was it that long ago?" Where Witten and I, as we went into the middle of the beginning of the COVID crisis, we decide to share our combined knowledge and debrief the week in with all of you guys, so that everyone could listen in to how we were making sense of all the bullshit that was out there and the legislation that was dropping. It was really, really challenging and difficult times to find the right information. So we started trying to help everybody out there make better decisions in business, in property, and investing, and make sense of the mayhem out there. And we've kind of enjoyed it along the way, and we've kept doing it with the hope that each week we can make a bit more sense of what's going on out in the world of property, investing, business, finance, politics, and also enjoy a nice glass of wine with all of you on a Friday.
Well, Rose, we've missed you too, mate. Thanks for the shout out. A good excuse to have a good glass of wine with good friends. And our first initial iteration was called Drunk and Disorderly, but we upgraded that to Wealth, Wine and Wisdom. So great to have everyone here tonight. From this, Fenton, too, just a few of you, we've got Julie on, who's part of our new program that we launched for business owners. The exit plan is sort of grown from our banter and our conversations about helping people in your world, the world of your background anyway, sort of banking and financial planning and finance, and my world in the world of real estate. And certainly both of us in business together as well, trying to help business owners navigate, trying to help property investors navigate, trying to help people who, want to get ahead of the moves that the government are making. So there you go. So
I was just reflecting on that the other night when I was in hospital with the little man Leo. He's all well now, but he's been very, very sick, but he's back on the mend. As I was sitting in hospital, just sort of reflecting on different things while he was asleep, I was like, actually, yeah, the exit plan is the extension of Wealth, Wine and Wisdom for business owners, and so really taken something that's been really a philanthropic, if you could call it that, effort to maybe not giving money to charity, but trying to give good information to the world, and sort of now turned that into the exit plan, which is well underway now. And we came to you guys live from the exit plan 2 weeks ago. So
just
that
the other day. Yeah.
that was one of our second events where we help business owners navigate the complex world of tax, finance, accounting, managing their team, investing the full 9 yards. And it's been a bit of a trip because in my world, we tend not to know too much about property. And what I've learned through hanging out with Witten is that there's not too many people more knowledgeable than this bloke when it comes to real estate, especially in Australia. And mate, sort of really, I saw some of the results actually. And maybe we'll start here. This isn't a gloating platform, although it should be. Keep his license. Oh, yeah, that's true, Alison. And but in the beginning of COVID, and this is a classic example of information, the right information, not sensationalist information. And we'll get into the core content soon, which is all about what's been happening in the news and what you should know. And we're going to decant the week in a moment. But
yeah,
in the middle of the or at the beginning of the pandemic, when everyone was running around saying that the world's going to end, and we were finding all of the information that sort of said that we maybe had a few of these things happen over the last 10,000 years. Does that drive people out of cities and all of that sort of jazz? Well, Witten doubled down on property at that point in time and saw some of the results of it. And it's been quite astounding, mate. I think we've seen 700s turn into 1.1s. We've seen 1.1s turn into 1.5s, and we've seen 1.2s turn into 1.8s. They couldn't have got it much more wrong. I'd love to be able to get some of the headlines from 3 years ago and be able to just compare what was said to what actually is. And for those of you who are really keen, you can go back and listen to the podcast, Wealth, Wine and Wisdom, and hear what we were saying back then to make sure that we're not lying. But mate, pretty incredible, some of the results that you've been getting for you and your team, based on them having the guts to go in when the rest of the world was a little bit scared.
Well, certainly we've got a couple on today who've received some pretty good results in that sort of space as well. So, it's one of those things, mate. And folks listening in, at the end of the day, you got to be, really cognizant of who you're listening to and why they're saying the things that they're saying. And that's what Wealth, Wine and Wisdom is all about. Andy, mate, as we go, Deb's here as well. There's Deb. Hello, Deb. Good to see you, mate. And we're up and at it. And well, let's get into it, mate. Let's have a bit of a chat. We've got lots to talk about, folks. The first little part of what we do is decant the week. It's kind of the upgraded version of what's in the news. So let's kick it off. Let's have a go straight after this. Hang on. Well, what's going on, mate? I might kick off today, and then
I was going to rock paper scissors you for it, but no, you go.
Maybe we should have, but I'll be quick. I'll be fast. Probably back at you with your conversation. There was talk about the the collapse of the property market in the early days of COVID, and it didn't make any sense that that would be the case. Of recent times, interest rates have gone up, slowed the market down. That's for sure. Growth in the market after 30% plus in some areas in a short period of time. Growth certainly slowed down the growth and regressed some markets on average. Not every individual property, by the way. However, if you look here, Andy, and folks dialing in, the tide has turned. Even in the midst of continuous interest rate rises, the property market is moving ever so strongly forward when it comes to growth, Andy. 15-month high in the auction clearance. So in the middle of the biggest boom 15 months ago, we're actually now, as of today, at a 15-month high for auction clearance rates.
Incredible.
It's incredible. And, the challenge is, folks, it's kind of like, it's the market's getting a lift because the supply chain is so knackered. You guys have heard me talk about this one. But Andy, this one's a pretty interesting
one. For those of you, whack it in the chat, start to engage with us. Why do you think that the supply chain's buggered? Just whack it in there while Jason waxes lyrical.
Everyone from Positive should know this one. I tell you, all the Positive crew should be all over this like a rat up a drain pipe. But listen, there's some pretty interesting things afoot, Andy. The median price is moving, but it's a bit misleading, right? It's a bit misleading because in the big cities, the actual, politicians have ruined some of our supply chain. And it, like you guys have heard me say ad nauseum, it actually started before COVID, and they're still at it now. We'll talk about that a bit later. But Andy, folks listening in, what's moving the needle in these median house prices of recent months is actually, if you have a look at Melbourne, let's have a look at Melbourne and Sydney, the 75th percentile, which means, folks, the most expensive properties, right? The flight to quality properties, people are arguing over. People with money, Andy, I did this the other night at mentoring. 25% of all property purchases in the last 12 months have been bought in cash, zero mortgage. 25% on the eastern seaboard of Australia. Okay.
Wow.
Yeah, it's insane. It's unbelievable.
That's a lot of drug money.
Mate, there you go. Maybe everyone was Uber drugs in the middle of COVID, right? So there's more cash around than you could possibly know what to do with right now. And for us, we're like, well, where is it? Our interest rates are going up. But the wealthy got extremely wealthy. And those with money are buying good quality properties, Andy, and there's not much around. And it's actually moving the needle. The bottom end is not moving the needle. It's the upper end moving the needle. And we're seeing it as well. Between the sort of $600,000 to $900,000 buying market's really slow go. But the purchasing power over and above, $1 million to $2 million has been strong, folks, in the market. And I did a little bit on my Wealth Coffee chats this morning, Andy, on this one as well, that, in 2021 and to the end of 22, the number of $2 million purchases on the eastern seaboard of Australia rose from the highest that's ever been, which was 21,000 in 2019, $2 million purchases. Just have a guess, Andy. Anyone listening online, have a guess. 21,000 purchases over $2 million residential, right? And then in 20, that was in 2020. In 2021 and 2022, almost the same numbers. What were the numbers? From 21,000 to what number? How many thousand? Chuck it in the chat if you think you got the number, or you were listening to my Wealth Coffee chat this morning.
I'm going to say, I reckon it's going to be on the back of more recent migration, but I'm gonna maybe whack it in at a factor of 3 there, mate. I'm gonna lock in 60,000, Eddie. What
Mate,
is it?
you lock it in, Eddie. Jules was absolutely bullish, but Jules, I reckon is coming. Andy, it was 60,000 2 years in a row, 61 and then 66,000. Yeah,
just as an FYI, I didn't watch Wealth Coffee Chats this morning, so that. But it makes sense.
Yeah.
Well, because all I did is I took the 300,000 people that had been here and basically said, well, 20% of them are probably going to be buying a home when they get here. So, that number could have been anywhere between Julie's and mine. 100 to 60 to 100. I actually was thinking I was lowballing it a little bit.
Well, and Fenton's a psychic, Jules reckons. But I think it's only the start. And Jules, I reckon your number is going to be the number for the coming years. Andy, there's a lot of people migrating to Australia. They're coming with money. Some pretty significant things going on when it comes to, the world of property. And supply. So, that's what's in the news, folks, right now. I mean, obviously, the elephant in the room, Andy, is interest rates went up again. The general consensus is the budget was inflationary. And, both you and I agree with that, like fucking no brainer. Like, let's give more money away that we don't fucking need. So the reaction was, our good mate, here. Where'd he go? There he is.
It's the new. I reckon it's the new slogan, mate. It's what happened to Australia and the interest rates. It was Lowe's fault.
It was Lowe's fault. Yeah. The old government's chucking the old mate under the bus. Phil's like, well, come on, like, stop giving free money away. No one needs it. No one needs it.
Can I dovetail on this? And because this is a little bit of what was in the news for me. And
over to you, mate. Over to you. What's in the news?
We'll bounce back.
Yeah.
Have a look at this peanut. Like, have a look at this absolute muppet. I couldn't believe it when I read these headlines. SA Treasurer Stephen Mulligan. Is that how you pronounce it? Mulligan? Doesn't that mean do-over in golf? Isn't that I need a do-over?
Yeah, it's just not a good name, is it? The old Mulligan. The old Mulligan.
Says he's desperately hoping the RBA won't lift rates again because household capacity is severely stretched. So what does he do? He goes, well, for first home buyers, I'm gonna scrap the taxes on there. This is another one. First home buyers purchasing their first home up to 650,000 are the big winners in South Australia. They won't be paying stamp duty, $29,000. The winners and losers in the SA budget. Now, for those of you who don't kind of
get $15,000 of free cash on top of that, you're talking 45 grand. Like, so
what's the inflation pressure that's going to do, right? On a $600,000 property, you're going to give $30,000 benefit, right? That's basically a 5% inflationary figure, right? So inflationary move. And so you said in here, the state budget attempts to get more buyers into the property market. Stamp duty will be scrapped. These guys should pass a fucking test, Jace. They should have to pass an exam before they're politicians.
Well, you got to get licensed to own a dog, but you don't need a license or a degree to be a politician. Like,
I'm
seriously,
flabbergasted. Like, he literally said those two things in the same press release. I hope the RBA doesn't raise interest rates. I've just made housing more affordable to try and get more people to buy. It's like, hang on, when Mr. McNaughton was delivering economics at school, this bloke was clearly smoking cones out the back. Allegedly. I'm just joking. He wasn't. I would never say that.
Well, I mean, a very similar thing happened in New South Wales, Andy, when, they're saying like, all right, we're going to do a certain incentive to a certain price point. In New South Wales, I think it was $1 million or something. And I'd quickly find it. So again, what happened to all of the properties that were around the $800,000 or $900,000, right? They just went up, right? What's going to happen in Adelaide? You watch. The median house price in Adelaide magically will go from 550 to 650, right? Because everyone's like, oh, fuck them. The first home buyers are going to pay no stamp duty. Boom. It's stupid. It's stupid, right? You know, you don't need yeah. You don't need financial acumen to be the treasurer. Well, there you go. Well, I'd be interested. You know what? I'd be interested to know if actually they did have any any qualifications to be there. But you're right, Andy. Like that sort of stuff is not doing us any favors. It pushes the prices of real estate, and this is, you know, on one side, I'm a beneficiary of this with our clients, and you and I are too. And on the other side, you're like, it's sort of giving with one hand, but in the end, it's this kind of, it'll get taken away with something else, right? It's not normal. Yeah, it's not natural. It's not normal market sort of to, you know, it's not the right thing to do. And yeah, anyway, yep, you're dead right. Yeah.
I think Allison's talking about Polly's, not about us.
Yeah. Well, you know, and they're just grasping at straws. Let me tell you, because out and about in the marketplace right now, mate, you know, we've got some ludicrous ideas that build to rent's going to help our supply problem, you know, in the world of real estate. It's not going to help it, folks, you know. But, you know, we've got inflation issues, Andy, which, you know, we were hoping that we're going to be slowing down, but the government's still throwing money at stupid things, which is then inflationary. The RBA is going, well, fuck, you know, you're not making my job easy. You know, the only thing we've got to bash, you know, you see everything as a nail if all you've got is a hammer. So, you know, they're just putting the interest rates up. So by and large, folks, unfortunately, you know, I think for many of us, we're going to see maybe one or two more interest rate rises, Andy, is the general consensus.
Out of expectations. And I've got some slides on stats of bond yields and things like that if you want to go in later. But
over to you, mate. Yeah.
Well, maybe not just yet, but if we want to get into some of the more technical side later. But yeah, I tend to agree. And just to be super, super clear to everybody who's out there, Lowe has one mechanism that he can use to help the economy, right? And it is it's interest rates. And he raises interest rates in order to get the economy back into the target band of inflation. And this is it, right? The target band of inflation is 2 to 3%. So yeah. Lowe's job is to get the market back there, right? Now, is that coming up the right way for you, Jace?
Yeah, I can see it. I think on your side, unless you've got to go in and sort of untick a mirroring, but it's mirroring for you.
As long as it's all right for you.
Yeah, we can see it. So the target range 2 to 3%, which is, you know, that's their job.
And all he has in order to be able to get the inflationary rate back there is to do this, which is to raise the cash rate. And he's going to keep doing that. He's going to keep doing that until such time that and I don't think you can see the end of that. I might pull my zoom back a little bit, but until such time that you cut it off for some reason. But it's at 4% now, and he's going to keep raising interest rates until he can get this band of inflation back down to here. Right now, the big issue, and let's be super, super clear about this, is that if the government keep doing things that stimulate the economy and put more money into the economy and make times better, easier for us, right, then inflation will remain high and Lowe will keep raising rates.
Yeah.
Like, if there's one thing that I'd love everyone to take away from this, is that Lowe can only raise interest rates, but the government can do a hell of a lot more to manage inflation, right? They've got policy, they've got wage policies, they've got
mate, you know,
tariffs. They've got many different mechanisms, and they're not using any of them.
No.
As a matter of fact, just waxing a little bit lyrical on that because I was trying to find this just as we came on board because I thought, bloody, I know where Jason's going with this. He's going to talk about this. But here we go. So what do you reckon? What do you reckon one of the key themes? So this is an inflation slide, right? So this is goods and services over this side, right? And so we've got insurance and financial services, education. Let's look at the big ones: health, food and alcoholic beverages. So the further over this side they are, the higher the price inflation, the more expensive this is becoming. So if we just take a look at the top three, right? These three here, and just to be
Housing,
clear, it's
housing, health, and education, all to do with the government's. It's oh, geez.
well, yeah. The question was going to be, what do these things have in common?
Did I just give it away?
Yeah. What do these things have in common? And what don't these?
Yeah.
Right? What don't these? These don't have government intervention in any way, shape, or form.
Yeah.
Right? They don't. And the further you go down this inflation, and I broke it apart the other day. It's a little bit too complex. I'll figure out how to make it more simple so we can bring it in here.
Yeah.
But ultimately, the areas that have got the highest inflationary rates, and power and gas is one of them, right, is the most government intervention, has the highest level of inflation, and then it scales back down to the least government intervention, has the least or is even negative inflation, which means deflationary. It's actually becoming cheaper. So
you leave it alone. The real market. I mean, this happened in the GFC, Andy, didn't it? Like when governments got involved and they were like, oh, let's chuck money at banks that shouldn't be alive and stuff like that. And it ended up being a disaster, right? So, that sort of stuff is,
it's crazy. And it makes it very, very difficult actually to navigate, investing and things like that. If you want to look at fundamentals, and if you want to be the chair of the Fed, because the chair of the Fed, unlike you and me, Jace, like we're allowed to look at fundamentals and
RBA or Fed?
Sorry, RBA, Reserve Bank of Australia. The difference between him and us, we can look at the fundamentals, right? But then we can make decisions to go against the fundamentals. We can say, well, that's what the numbers say, but these guys are going to do stupid things with economic policy, so we're going to bet on them being stupid. And well, we're almost right when we bet on that, right? But
yeah, it's a no-brainer.
but Lowe doesn't have that capacity. He has to look at numbers that are in the past, and he makes a decision purely based on those numbers to raise or to cut. Very, very little soft, interpretation stuff that sits there. It's a very clear directive, and it's very clearly based on historic numbers. And so, unfortunately, I reckon we will be in for a little bit more, because the other side, look at Lowe, he's also not going to go out with messing up inflation for Australia, because his tenure may be up, and I'm pretty sure he's not going to want to walk out of there, because as soon as he walks out of the RBA, mate, he loses the microphone.
Yeah.
Mate, he won't be just under the bus. They'll be backing over him. They'll be running back over. The slogan will be, "It was Lowe's fault for the next decade."
Well, and at the end of the day, you like we've had chats about this, hedging against inflation. What sort of investment can you be in with, when inflation gives it a lift? I did a bit of a analysis on real estate. 3.5% on average for the last 30 years inflation. Real estate got to carry. Like property got to carry a 3.5% kind of carry every year. And anything above that was kind of, maybe it did itself, right? So it's an interesting one where, as investors, and business owners are like, okay, well, this thing, we can't control inflation, but what can we do with our money? Where can we put our things, the decisions we can make? All in all, the disasters, like, you were talking about those stuff, we were talking about those results today with real estate. The reason those results happened is because of, on the other side of the coin, problems and disasters with mostly government mismanagement, right?
Yeah.
Right now, unless the state governments do some intervention with rent controls, rents will continue to go up pretty significantly over the next 3 to 5 years. It'll be almost like the final nail in the coffin. Oh, got children calling me. the final nail in the coffin if they did something like that, because that would absolutely poleaxe supply chains. Supply chains across the country are down, like in some instances, 85% in this country. And we've now received almost like a million people migrating into the country in the last 18 months, right? Like physical bodies. And we're so many thousands, almost hundreds of thousands of dollars, hundreds of thousands properties short on our world. And, that's just, that's not talking about business owners either, Andy. You and I have talked about this. So, what else have you got for everyone today, mate, out there in the world of investing or business? What else is in the news?
Well, mate, this was the only thing that was either interesting or surprising. It was serious question. How often do you wash your jeans? I found it fascinating. Some people pop their jeans in the freezer to kill germs, while others wash their beloved denim. So what are the rules, Jace? I don't know about you, mate. I don't actually know what happens to my jeans. After they hit the floor, they miraculously end back up there. But I'd never heard of anybody actually freezing their jeans. I thought maybe that might be a Queensland thing. Is that something you do, Jace? Or
well, no, mate. I've got a very magical elf in my house who does our laundry, thankfully. So I don't have to freeze my jeans.
So, mate, that's what I got after reading the politician stuff. I found that far more interesting and actually more accurate. But this is an interesting one, and we were talking about this a little while back. As AI started, frozen balls might be a good feel. Oh, Julie. Oh, God, love you. So this is a really interesting one, right? Because AI is such a big theme at the moment. Chat GPT, it kind of got hot and it disappeared a little bit, but it's a big theme. It's like social media, 10 years ago. AI is the new talking point, not going away. There's lots of different headlines in and around it, but the investing side is what I'm most interested in. And so this is where those super giants start to become a lot more attractive again. So, the growth story behind Microsoft by proxy own a fairly significant part of Chat GPT, which is private, but it owns a big swag of it.
They went in pretty hard, didn't they? What was it? Chat GPT, the fastest $1 trillion business. Like, what was the time frame? Anyway, I'm distracting you.
Almost sort of irrelevant, because I mean it's all based on growth, right? So the number is just fictitious. It's based on what it could be, being a growth stock. But this is an interesting headline, because investors with more than $1 trillion in assets investors with more than 1 trillion of assets to invest are reluctantly buying into markets as they rally in favor of tech stocks gathering momentum. And so basically these are $1 trillion hedge funds saying you can't be out of the market on AI. Because if you miss it, and this is the thing, if you do miss it, this is going to be, these will be the oh geez, I wish I bought Apple at 5 cents. This is going to be, geez, I wish I bought Microsoft at $1,000. Do you know what I mean? So this is the beginning of a new race in technology, and I think it's one that, as investors, we absolutely have to be watching. We absolutely have to be watching, because then when we go to the opposite side of this, we then see articles like this, which is interesting.
Jeez. Yeah. All right, then let's invest in something and wipe us out.
Well, so this is perfect, right? Invest in AI, because it's either going to be incredible and amazing, or it'll kill us. And if it kills us, it doesn't actually matter. It's going to wipe us off the face of humanity.
Right. What will we care? What will we care, Fenton? We won't be here.
But look, I say that tongue in cheek, but it's a very, very real theme, right? Because these are now, we've already talked about the mega giant companies. These will be the whatever is mega giant or above that, the Superman stocks or the super person stocks, whatever you want to call them. Because the people who manage to get this right are going to really be able to write a free ticket, and they will dominate market space. So really interesting space to be in. It's one of those things where you almost go, you could almost say, look, put a 5% of the portfolio right across the board and sort of hedge your bets. Not that I'm giving advice here, but this is the kind of thing that I'd urge people to be thinking about with their advisors and investment advisors, because it's not going away. And if it doesn't kill us, it's going to be a pretty strong theme in the future. And whoever gets it right, and of which, let's face it, Jace, multiple people might get it right.
Well,
in different forms.
It's very likely, and let's talk about it. From a comparison to cryptocurrency, Bitcoin, those conversations from 2, 3, 5 years ago. If you purchased at a period of time, you're still up. Significantly. In those marketplaces. There's still lots of legislation in and around those things, but AI, well, again, one of those things taken off like a firecracker, lots of stuff to work out. However, if you're in that world,
can you imagine the lawsuit, like the equivalent to the Mark Zuckerberg in front of Congress, and it'll be like, hang on, just before I respond to this, ChatGPT, what would you say? Can you imagine it? It'd be like, mate, you guys couldn't even take down Kerry Packer. You are monumentally screwed against ChatGPT. Like, seriously.
Right. No. And this is, it even goes to the foundations of conversations where, politics and politicians and governments are, unfortunately, that they've been so cumbersome in their growth and their own innovation that businesses and marketplaces have left them behind. And it's some interesting, if we look out into the future, Andy, 20, 30, 40, 50 years, there's a lot of foundational things that might change. Some of the conversations I was talking with my crew the other day. We've got this baby boomer transformation over the next 10 years. 4 million Aussies going to retire, the largest wealth transfer ever in Australia's history, like to the tune of $3.5 trillion, right? For over the next 30 years, transferring from one generation to the next. That's $250 billion a year in wealth transferring over the next 30 years. And, arguably, I've seen it in real estate already, where property prices for the good quality things are going crazy. But yeah, interesting times in that space when it comes to that, that world.
But it's, there's so much that's going to happen. The reality is nothing's going to stop it. And it's a matter of how do we best utilize it? How do they best utilize it? Governments will try and regulate it. They won't succeed. They can't. It's too big. They haven't been able to properly regulate social media, and this thing is likely going to become as big and as fast and more powerful potentially than the social media side. So it's a matter of, it's always been man with machine. Unless you read the Fin Review, which says man without machine because machine killed man in 2 years. But look, it's another theme. It's a big theme, and I think in the investing world, we need to be looking at it and who's actually in control of it, and because again, it's going to make significant inroads in the finance industry. We've already seen, Apple Pay coming in, Apple Bank. These companies will be using this already in the background, all of these AI, artificial intelligence, not ChatGPT, but variations of this kind of technology within the systems in order to be able to provide better services to you as consumers. So, things to come.
Yeah, at the end of the day, there's lots of stuff going on there, and you got to be aware of it. Really, at the end of the day, it's always interesting when people sort of say, "Well, what if it all goes wrong?" Well, you know what? If it all goes wrong, we're all in the same boat, so who cares? But what if it doesn't, folks? What if you hit in the corner for the next 20 years worrying about ChatGPT? What if you hit in the corner worrying about, 2000 when the clock was going to fail on the computer? What if you hid in the corner when, the world's banking crisis in 2010 was going to collapse the world as we knew it? Blah, 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 blah. What if? Maybe one of those will come true one day. Who knows? But, right now, the evidence says that they don't. And we as humans, people, pretty resilient when it comes to this stuff. So, you and I, Andy, heard a very learned speaker on this AI ChatGPT stuff, and he's a pretty significant scientist, basically saying, this stuff's a long way from, Terminator, if ever it could be there. So, let's be real. But from an investor's point of view, what we're saying is, if you want to get on a bandwagon that people get behind, this is one of the new ones, right? Even if it's $1,000, $5,000, $10,000, even if it's a small amount of your investment, maybe you want to be part of it. Something maybe you entertain is really the takeaway, Andy.
And it's research it and don't listen to mainstream media, because you're just going to get all of the potential disaster stories behind it. Really what you need to be looking for is a fact. So, find resources of people who are talking about utilizing this product productively in society, within businesses. You're going to have to do your own research, because right now, unfortunately, since we started this, the media has only gotten worse and worse.
Wow,
and worse.
Mate, I remember reading an article saying, we had all these machines coming, and within 10 years, humans would have nothing to do, and the world would be full of people with no jobs. I remember that was about 70 years ago when, factory, well, it's interesting.
Robotics hit factories. I remember when they first started doing it, replacing people. And then, of course, it's man watching machine do its thing. And there's a long way to go with it. But the key thing is do your research, be aware of it. And it's definitely one to be looking at from my books, because
have a look.
Yeah.
Well, let's talk about the number one menace. We haven't got there yet, and we're only halfway through the show. Not even fully. Anyway, there's lots to talk about, folks. Let's come up after this.
I love that.
Well, what is going on out there? Well, let's have a look at this. Have a look at the surprise on his face. Hey, we've got a budget surplus. Oh, we didn't know about that. Well, good on you, mate. $80 billion turnaround from 12 months ago. Well, it's interesting. Wow, it's interesting. Anyway, it's terrifying. It's it's a word that we use way too many times. But reality is, where did all that money come from, Fenton? Where did it all come from? It didn't come from the government. Here's where the hardworking people came from.
Came from you and me and every small to medium business. So 60% of that $325 billion came from people like you and me, and many of the people who are watching, like Julie and small business. 60% of that number that came from us. Us employing people and paying their wages and their taxes. And
do you know what I mean? Like, have a look at the surprise on this bloke's face. He's like, "Fuck! Yeah, guess what, folks? Guess what? We thought we were fucked, but we actually got 80 million. We got a surplus. Like, how can you imagine running a business that way? Imagine running a home budget that way, Fenton. You're like, oh yeah. Imagine running a property investment that way, folks. You're like, oh, I bought it. I've got no idea what's going to happen. But you know what? We'll hang on and we'll see what happens." He's like, hey, check us out. Look at me. 80 billion, more than I expected. Come on now.
It's amazing, isn't it? And you heard about Andrews' surplus, didn't you?
Well, that one.
Yes.
Well, good. Check that out. Right, look at this. Like, that's how to manage a state. You're at about 30, 40 billion for a while, and then all of a sudden you went from 30 billion to what? 120 billion.
Oh, it looks like that's estimate. So
that's
120.
where it is there, right? So this is kind of forecasts, budget estimates, and then budget estimates again.
So he's staring down $100 billion increase in 3 years.
Mate, that's the number. This is it here. This is the he was about it at 30 billion, and I should rub that out so you can see it. But this is it. 2019, right there was about let's call it 30 billion, and right now that's 130 billion. $100 billion, $100 billion debt. Negative.
And this is what people should be understanding when it comes to politics. I mean, this should be on the front page of every newspaper. Not any of the other garbage that they talk about, but how have your lives improved based on the $100 billion that was spent by the Victorian government?
What did they do? They locked you down. They locked you down for the longest lockdown on the planet. For what? Like what achievement to put the whole population into $100 billion worth of debt? You and I listened to a pretty good podcast recently. Or we're into it anyway. Alison, you did right. That got me right. Someone just smeared some peanut butter on the ground.
I reckon that's what they've done in that Alison. They've taken it and they've gone, hang on. It's like the old monkey. That can't be right. No, that it's actually down. Our debt's down. Our debt's down.
Well, it's well, that's the thing. They love him. They voted for him. Well, it's a bloody funny thing, isn't it? But but what's the point of this? At the end of the day, you got to watch the politicians. I had something else here. Here's the drill, Fenton. We've got them having a crack at bringing in super caps, when it comes to how much you've got in your super. You and I have said this to many people. We dare you to get 3 million in your super. Get on with it then. But for those who do, there's some things going on. Australia is one of the wealthiest places when it comes to super contributions and those things. But check it out. A review by super funds have found it's been charging members with multiple accounts and duplicate fees. Sorry, we overcharged you 70 million in fees. Sorry, just, crikey.
We should have a, what do they call it? A royal inquiry into industry super funds.
Yeah, it's mad. But, that's what's going on in my neck of the woods. Fenton, what do you got over your neck of the woods? Victoria's got some debt like it wouldn't believe, but...
we actually slipped back from AAA rated state government bonds to AA rated. So we actually dropped a rating because of how much money was spent in Australia. It's crazy, absolutely crazy,
madness.
Mate, so the rest of the stuff I had was mostly in and around inflation. It was really just some data, and pulled straight from the Australian Bureau of Statistics and the Reserve Bank website, just to kind of put some more heat behind. It's not Lowe's fault where he is, but let's have a look at the real data. Australian rents are on the rise. Why are rents on the rise? Because the cost for, and it's not interest rates, the cost of ownership of property is going up. Now let's separate that a little bit from just interest rates. When you raise land taxes in Victoria, thank you, Dan Andrews, when you start to create high levels of duties, right, in other states, then that passes on a cost increase to the people who own the properties. That cost increase then goes on to the end consumer, right? When you hire people from outside of Australia to build in Australia, my prediction is in 5 years' time, all of those systems will be completely fucked. But the hedge funds will have done very, very well and built a lot of really good real estate.
Well, they're not going to lose any money, are they, Fenton? They'll probably have a bet on themselves actually winning and losing. So they'll have a side bet on on their own share price going up or down.
The moment they feel like they're losing, yeah, they'll be shorting themselves like there's no tomorrow. So what is one of the big topics in the news at the moment is price increases that relate to energy prices.
Yeah.
Well, here's what happens when you start shutting down fucking coal mines, shutting down coal gas stations, when you start leaping to green without really thinking about like what are the long-term ramifications of this. Like, yes, we all want to go green. No, I'm not having a pop at that. But let's do it in such a way that it is sustainable, and let's value the word sustainable, right? Rather than let's just start, making massive popular decisions, which end up, when things go a little bit wrong, putting massive price increase pressures back into the system. Your wonderful state there, Jace, you're going to benefit hugely from this with the coal going back onto mainstream and turning on the coal again, and then putting price increases to the rest of Australia in order to be able to get a little bit of Queensland coal energy. Mate, that's going to send electricity prices through the roof. So, mate, bit of pain to come when it comes to electricity. Totally government regulated, one of the highest regulated industries in Australia.
It's ludicrous. Yeah.
One of the other heavily taxed industries in Australia is petrol. They released well, here's one thing: like, if they really wanted to help consumers a little bit without putting too much more money back in their pocket, maybe they could have left. Remember, they had the fuel subsidy for a little while, because prices were getting a little bit out of control. Maybe they could have left a little bit more of that in play in order to help us manage what is absurdly high, and again, very, very political when it comes to oil. Very, very politically motivated. Very important to the economy. And here's the thing, mate. I don't know about where you live, but if you live where I live, you pay a luxury car tax on a green energy car. So riddle me that, Batman. Like, Jesus, you call yourself green. You're not green. You couldn't be more brown coal. If you smeared your face with mud. But this is what we're staring down at the moment. That's not going away anytime soon either. So again, inflationary pressures. This is one that I found really interesting, especially with having a son which spends like one day out of 50 in daycare.
Welcome to the world of parenthood, Fenton.
Well, mate, they got into our industry for charging dead people, right? And fair enough, right? And they say fee for no service. I'm like, Jesus, I've literally paid now 5 weeks for nothing. I've paid 5 weeks for a slot. That's what I've paid for 5 weeks for the opportunity to use a service. It's crazy.
Well, mate, in education, I remember having to put, the moment we were pregnant, we had to put $5,000 and $10,000 deposits down when we used to live in Sydney to try and get kids into schools. Well, maybe I should have rethought that one, but at the end of the day, it's ludicrous.
So. And I say that welcome to parenthood. Thank you. Appreciate all of your appreciate all of the sympathy from all of you. Hope you have a wonderful weekend, everyone. So this is interesting, because this is very inflationary, actually, because they've and this part I don't understand as well, Jace. Like this. So most of so let me explain it. Sorry, I'm getting ahead of myself. So this chart is inflation across different sectors in education. All right, preschool, primary education, including daycare. Then we've got tertiary education in orange. We've got secondary in dark blue. Education group is a whole in the red. So looking at the inflation, 6 kids. Is that what you just put us? 6 kids? I think I just had a heart attack. Don't forget Doggy Day. Yeah. So obviously education, again, heavily regulated, but there's some inflationary pressures around there. Tough industry. But what I don't understand, and again, this is kind of this popularity politics, if you will. Daycare has come down. There's larger amounts of subsidies in there. Now, what I don't get about this part, and I'm not saying that we shouldn't have subsidies in here. I probably am, but I'm not directly going to say it because I want to be liked. So I'm taking the politician's view on it. But they're making something cheaper that's damn near almost impossible to get into.
Yeah, well, yeah.
It's actually going against the law of economics.
It's what. So what are you saying? It's fool's gold, like it's as in, yeah.
Totally.
So thanks, but I can't even get in. So you're saying, oh, we've made it cheaper, but it's not because I can't even get in. So it's not a saving. Right.
Well, a little bit of that, but also what they're doing is they're perpetuating a later problem. Right now, in our world, Jace, it's like, well, we couldn't service our clients for the next 20 years, right? And so what do?
I'm with Sonia, mate. Welcome to parenthood.
That's not what it's about, people. It's not about that. All right.
This is not
for God's sake. It's about the economics.
This is not new. This has been around for 20 years.
Come on now, listen, people. This is about the economics. They're subsidizing probably the area that needs the least amount of subsidy, but really what they should be doing if they want to be doing something is stimulating the ability to create more centers, right? Because that will naturally push prices down. If you create more centers, provide subsidies to the places so that you can have more of them, right? It's a harder policy. It's a longer term policy, but it's a policy that would work. You expand the sector, you stop you stop such heavy demand and you spread that out. It has a naturally deflationary effect.
Well, listen, like I've been here, Fenton, as well, and
that's a bit sexist, Sonia. Hang on.
Well, listen, I'm with Sonia. I'm with Sonia because here's what I believe. Grandparents are, the best kept secret in this place, right? So imagine you get a tax deduction for having your parents look after your children rather than putting them into daycare centers, right? So, imagine that. Imagine, untapped resource. Exactly, Sonia. I'm with you, mate. I'm with you. I actually did this for quite a while. I've actually got a business plan written on this one. But, because I spent so much time in Singapore and Asia many years ago, in Singapore, Andy, and I don't know if it's the case right now, but 30 years ago, if your parents lived with you in Singapore and they were not working, you actually claimed them as a tax deduction in Singapore if you were a working adult, right? So, so it was actually a tax deduction.
That's an incentive to keep them alive, really. Then, isn't it?
It's not bad. At the end, instead of wishing they'd pop off and leave you their house, maybe you want them to stay around because you got a tax deduction. But all jokes aside, untapped resource or resource, yeah, for sure, Sonia. Yeah, I'm with Sonia. Like, I think there's some better ways to do it. You're saying the same thing, Andy. Like, basically, at the end of the day, there's better ways to do this. What are we doing?
It's popularity politics. It's literally going, well, we've thrown money at this.
Yep.
And now we've created a short-term benefit for people, which is a limited benefit because those of you who are trying to get into daycare and things like that, it's very, very difficult. So a short-term benefit that many people can't even receive. But long-term pain, right? Because then all of a sudden that's going to skyrocket. That's going to go back up. And with inflation, but understand this multiple, and this is my final point, and stop bloody taking the piss out of me for being a first-time parent.
We're all sitting here going, all right, Fenton, keep going, mate. You'll be right.
You can all go to hell, all right? I don't care if the viewing drops. You can all. I hope it rains on the weekend. But so what's inflation at the moment, Jace? What is it this year?
6%, 6 or something. Is that right?
6 to 7%.
Yeah.
Right. That's inflation this year. Right. Now, you've seen the natural course of inflation since March 18, right, to where we are here, or look at the average. right? So we're sitting at around about 6%. Now, the light blue line was well on track with everybody else through that period of time, right? Obviously, we had the COVID period in 21 that there was some significant effects on. But what is going to happen to daycare in 2 cycles, right? Assuming that they then repeal this subsidy, what's going to happen to the cost in the blue bar
Well,
after
they call
2 more years of 6 and 7%?
All right. There's a term for it, folks. I was about to let go. You asking me or you asking everyone in the chuck it in
I'm
the chat?
asking everyone.
All right. I'll put a clock on. No, I don't have a clock. Well, it's called mean reversion, Andy. It goes back and it overshoots what it should have been. It'll pop back to being more expensive than it was. Yep. And away you go. Yep. Right. So
if it should have been tracking along this line and then it gets discounted to here, right, for a few years, then imagine the pain when it kicks back up to here in 3 years' time. Because
it's cliff the opposite way. Yep.
Yeah, it's a reverse cliff. And mum will need to stay at home. Childcare will be too expensive. 100%. And then what happens to the childcare industry?
Mate, it becomes a problem. And then obviously, we've got some amazing, mums who are absolute amazing humans in the workforce as well, if what happens is that becomes more expensive and they leave the workforce, we've got more problems because then we've got, less people in the workforce, less taxes, less jobs. Oh, it's a disaster. Anyway, Penton, welcome to parenthood.
I'm gonna coin a new phrase here. Excuse me, if I can get my lungs back. Coin a new phrase, which is first thought politics.
Yeah,
and we've really got to hold our local member, and we know about members to account. Don't hold them too tightly.
Yeah. All right, Penton, easy on the wine. All right.
we do, because what we should be asking, because sometimes, Jace, when this benefits you, and let's face it, it benefits me right now. That policy benefits me. But I look at it and I go, what's the second and third and fourth flow-on effect of this first thought politic?
Here's what's going to happen, mate. And you and I have talked about this ad nauseum, right? So, what
else is significant with 1979, Jace? Just a little bit of a pop quiz. Does anybody know what amazing thing happened in 1979?
1979. Gee, I was only 6 years old, so I'm not quite sure I paid any attention. 1979.
It was an amazing year.
Was it? It was an amazing year.
Somebody very special was born that year.
Was that you, Fenton?
Bingo.
Hey!
Yeah. I'm pretty sure it's in Wikipedia as well.
You can search it online, folks. It'll take you a fair bit to find, but Andy Fenton was born in 1979. There you go. Boom, boom. Listen, here's the downside. Here's the challenge. Here's the challenge, folks. On the opposite side of this, Andy, when we make having babies, replicating taxpayers, and I'll break it down.
Replicating taxpayers.
I'll break it down into very maybe unpopular terms, right?
Wow.
If you don't have enough babies to replace you and your partner, right, our population is decreasing. What is happening? What happens, folks? I mean, economically, this is a show about economics and money and investing and future. Like you got a problem on your hands. You got a problem on your hands, right? Economically, we have a challenge. When having a child or two or three becomes economically a problem, couples don't have multiple children. They don't even replace themselves in society, let alone grow the population of that country or that location or that, and I'll just be very rudimentary here, that taxpayer base, right? If there's two of you and you only have one baby, Andy, you guys are an example. You have one baby. Well, we lose two, when you're old and decrepit, and we only replaced with one. What happens to our economy is that our aging population, our people who contribute to the society are reduced significantly. And Andy, you asked the question, what's the problem with this? Well, the problem with this is happening everywhere. Now, in Australia, it's because, having children is expensive. I saw this. Folks, in the chat, tell me how much on average to have a child, what's the cost if you don't have insurance in America? If you don't have insurance, what's the physical dollar cost to have a baby in a hospital in America? Tell me dollars.
Does it have to be a dollar cost? I was about to say a kidney.
No, mate. Market. Well, you might have to sell. You might have to sell two to pay for it.
Wow.
Tell me in the chat what do you think it costs in America? It is ludicrous, like insane. Woo, $250.
Was that for the first year installment?
I saw this the other day, Jenna. 65. Yeah, Julie's on it. $65,000. Now, Jenna's like, it's a lot of money. Well, it can be insane. Kidneys are cheap. Everyone realizes you can live with one kidney, So it's insane. But where are we going with this? The point is, folks, that populations and replication is an interesting conversation, because if we look at the world population right now, we've got some trajectories of decline in actual world population, Andy. Number one thing, Elon Musk was asked a question not so long ago. What's the biggest risk to, the world right now? And he said depopulation. The average birth rate is falling, all right? The average birth rate is falling, and it's falling across many places in the world, going down. The future of population, and that, at the end of the day, that might be an okay thing, Andy. That might be a perfectly okay thing. We don't end up with 25 billion people on the planet. It's just 8. But what's the question? I'm going to ask you a question, Andy, and everyone. If we have less people and or older, the population on average across the world, lucky we have lucky we've got the Chemical Romance. Actually, you might be right, Alison. Alison's probably got a pretty good argument here. Maybe robots will do all the stuff. But all right, so tell me. I can't even remember my bloody question now. Right, what was the question? If people get older in the population, what do governments have to do, folks? What do governments do when the average age is older? And I'm going to give this away. The ratio of retiree to working age individual, boom, Tim's all over it. Tim got it before I even gave it away. Means higher taxes, folks.
Oh, shit. I was thinking that they'd just execute them.
Well, Andy, at the end of the day, the infrastructure, right, costs money, right? And let's just do the math on this, folks. If you've got a budget and you're going, all right, my money, let's call it, I don't know, let's call it $100 billion a year. And how do I make that as a government? That means I've got 26 million people paying me X dollars of tax. But now that 26 million people is only 10 million people. But I've still got the same infrastructure cost, Andy. Like what's like the 10 million people have got to pay the tax. I mean, it's not a stretch, this stuff. All right. So the point is, folks, the point is this. Here's my outcome. Here's my point. Australia, even though this is unpopular conversations, this is unpopular politically, but I believe it's popular economically, personally. But I've had a few heated debates with people on this. I think Australia should take advantage of how amazing and awesome we are to live in our country. Like every day of the week, we should say, yep, you can come into Australia, but you got to bring $2 million and you got to buy some real estate and you got to invest in business. You got to bring resources and you got to bring, you got to come and bring some stuff. That's my very self-centered version of the world, right? But if you think about,
don't just drop the family off with no presents for the birthday boy. Make sure that you come bearing gifts.
Yep.
And buy lots of things.
Away we go. But let me explain. The last 10 to 20 years, we've benefited from our relationship with China, right? We have. And significantly, by the way, if you want to add that up, China, don't get down on China. They've given us in Australia a significant quality of life that we couldn't even possibly imagine if we weren't their trading partner. Insane. Yeah. So I don't understand why it's so dumb to antagonize them. But anyway, but the upside is this, Andy. The last sort of 30 to 40 years, 50 years, China's been number one. Now India is our number one partner, and now our number one opportunity for economics. And check this out, right? So interestingly, right now, Indian migrants are coming into Australia pretty significantly. And this is where we've got some opportunity, right? 128,000 students in the last 12 months been pretty significant. I saw a stat the other day that every year there's 1 million millionaires created in India every year. 1 million millionaires. And I think it might have even been more. What's the point? Andy? Here's the point. Here's the stats, folks. Australia is the number one fastest growing population as a percentage of the world right now. And it is no joke that New Zealand and Canada are number 2 and 3. We are the 3 most interesting places, most desirable places to live on the planet. We should take advantage of that, right? Check out this, Andy. We've talked about Japan in the past. Japan's fucked, folks. Like, there's no rescuing Japan unless they open up their borders. They're fucked. Excuse the French.
You were about to say something else then.
Open up something else. Yeah. No. All right. But here's the drill. And in Australia, a long way to say who's winning in Australia. Queensland, Western Australia, South Australia at the moment. Now, it's not a big deal that, 15,000 and 37,000 out of 4 million people in New South Wales and Victoria. That's not a big deal. But what is a big deal is, 46,000 people, 89,000 people have directly moved into Queensland in the last 12 months. For the year ending September 22, right? So if I was a property investing type of person, I'd be saying, hey, listen.
Where the bloody hell are you?
Where the bloody hell are you, folks? There you go. Well, that's it. I'm done, Fenton. I'm done. Anyway, I think that was a long rant.
It's an interesting one because there's a difference between the Australia growth story from India as opposed to the Australia growth story from China. Whack it in the chat if you know what it is, because it's a major difference. It's not really subtle. It's quite significant. And the Indian growth story is going to take a lot more effort than what the China growth story did. Has anybody got that as to what the key difference is between the two? You're really interested. Do you know, mate?
What
The key difference.
So ask me the question again. So say the question.
So Australia benefits from China. Will benefit from India.
Yep.
And Australia did benefit significantly from China.
Yep.
How will it benefit differently? Because it's a very different benefit that we're going to get from India as opposed to China.
Yeah. So my initial conversation, without too much deep thought, is number one: China bought resources from us, helped us fuel the mining boom. India is an immigration partner. They'll send people to us. Yeah.
And so it's going to take so China's story was easy. Dig it up, ship it out. So fast, instantaneous effect right across Australia, mostly dug out from WA.
Yep. Brad, good work, Brad.
So with population growth, you need good economic policy in order to be able to fully take advantage of good population growth. And poor economic policy, it can create a lot of mayhem. And so this is where it's really going to be interesting, Jason. I think that the next 20 years, it'll be interesting to see how long Australia actually deals with these muppets and the poor leadership that we have in Australia.
Mate, we need some fucking strong leadership. Like, seriously. Like, it's that annoying that both you and I are entertaining going into politics, and that's fucking lunacy.
I know, it's crazy. Why would we want to destroy our lives? But
why would we want to do that? Fucking hell,
it feels like it's almost conscription. You have to do it in order to save where we're going. But even we had one of the best medical systems in the world. We still do. I'm not going to say that we don't. But going through there over the past week or so, one of the things that I noticed, because I've spent a lot of time in hospitals personally for different injuries and things over time, and family matters and stuff like that. And what I've noticed is a gradual change in the hospitals. And yes, they're understaffed, they're under-resourced, all of those things. But there's also this what seems to be creeping in this kind of buck passing. Lack of accountability in some measures, which I've never seen in hospitals before. And in my world and in your world, we always know that the people who operate within the business and medicine is a business, their culture is derived by the culture at the top, and the culture is set up at the very top. Right? And the top at the moment is being set by a very unusual crowd, I think, that potentially needs a bit of an upgrade, because what that does is it flows down, that culture flows down through the industries that it has the greatest impact on. And so let's have a look at what they are: their health, their energy. Obviously the system itself, it's in state government, which controls land release, so on and so forth. So this idea that this leadership is just a surface level political issue, it's not. It's actually downflowing into all areas, and you're probably seeing it in your worlds at the moment in various different areas as well. And this is something that I think really one of the keys of this show is to try and highlight what's really going on out there and bring some attention and accountability to the people who are making the decisions, so that we can have a better life for us and our kids, in 20 and 30 and 40 years time, because immigration can be a very, very strong ally, but it can also be very, very challenging if you don't have the right people and infrastructure behind it.
Yeah, dead right, mate. It's the investment now that will pay dividends for later. I think what might be good is actually we'll post that podcast from who was it the other day? I'm having a mental blank now. It was Costello and
and Anderson. Yeah, I'll find it right now and I'll put it into the chats.
Put it into the chat. It's like low debt is a youth policy, right? So like our job's not to leave our bloody children with massive amounts of debt. So there you go. Anyway, folks, as we said at the start, there's plenty going on, I tell you. And we certainly haven't been as regular as we'd like to be over the last few months, but we're going to get back on the wagon. And because we've, actually we're going to fall off the wagon and get back on the wine. No offense intended, but the idea, folks, is, let's support each other in this thing. We've probably got another 6-12 months of bit of roughness out there in the marketplace for business owners, property investors, and stuff like that. And, we want to make sure we maybe debrief the week, but also see what's going on as we go. There you go. So Andy's put the little chat in the box. If you're into it, watch. If you're into it, check out this interview. It is brilliant. I thought it was amazing, but not quite sure. Everyone's into politics and ideas like you and I, Andy. But at the end of the day, thanks for joining us, folks, for a glass of wine and a bit of a chat.
And for tonight, it's a good night from me.
It's a good night from him, folks. That's it. We're done and dusted for Wealth, Wine and Wisdom. Cheers, folks. Thanks for joining us. See you next time. We'll see you next week.
See you next week.
Yeah. Yes. Yeah. We'll do it. All right, folks. Adios. Bye-bye.
Bye-bye.
Thanks for watching another episode of Wealth, Wine and Wisdom.
Make sure you like, subscribe, and turn on the notifications so you never miss a thing, folks.
We'll look forward to seeing you next time.
Debrief the week with Wealth, Wine and Wisdom.
Every Friday at 5 p.m. Victoria and New South Wales time. We know that Queensland, South Australia, WA have different time zones, as does Darwin, but we're sure that you can do the calculations depending on whether it's daylight savings or not.
You can also catch up on all the episodes wherever you get your podcasts. Make sure you check out the Positive Mentor podcast from our 6-star team at positivementor.com.au.